Hi, have you ever wondered if you should change your investments depending on who's in the White House? Lately, it seems like every headline is predicting a financial disaster or a financial boom. Hi, I'm Chad Chase with CGN Advisors. Today, Mike Grime is joining me to talk a little bit about what really matters for your portfolio. So Mike, let me ask you a few questions. Does the president and who's in the White House really affect the market and the economy and ultimately portfolio values?
Well, Chad, that's a great question. I do get that quite a bit. Generally speaking, the market is influenced by many forces. It's not just influenced by one person. Certainly the president and the administration can influence policy in the near term, which oftentimes can lead to short-term reactions. But oftentimes we think that longer term outcomes are focused more on fundamentals. So really, we think the biggest risk for investors is having fear-based adjustments to their portfolios. And overall, we think it's important to focus on building a plan and having your investment portfolio fit with that or have good alignment with that plan.
Right?
Yeah.
Maybe I'll take this a little step further is when people talk about politics and whatnot, do political parties matter of who might be in charge of the White House or Congress or anything like that would have an effect on the economy?
Yeah, that's interesting. It's a popular narrative that I see, and there's been a lot of research done on this. Certainly, there have been times where markets have done better under one president or another, but the research shows over time that generally speaking, markets go up under either political party. What we also find is that trying to avoid investing during one political party or another political party can actually lead to detrimental returns. And so really, what we find is staying invested for the long term is really the best opportunity.
So what do you think the biggest mistakes that people make because of political headlines?
Really kind of making big changes and letting maybe your emotions take hold. And that's, it's easy to see why that can happen, but making large changes, going to cash for big periods of time, and until things calm down is what I often hear, which is, then it's hard to figure out when's the right time to get back in, or chasing hot sectors or kind of themes, so adjusting your portfolio that's intended for the long term to try to catch some sort of a hot sector or theme is often something that creates additional risk. So maybe ignoring taxes, getting away from what your actual risk tolerance is, just has a long-term effect.
So if someone's feeling nervous right now after reading the political headlines, what are maybe 2 or 3 things, practical things that they can do right now to protect their portfolio?
Yeah, I think first of all, kind of step back, take a breath, maybe try to zoom out a little bit and take a longer term view, knowing that certainly markets can become volatile in the near term, and they generally are. It's easy to forget that, markets go through corrections in most calendar years, regardless of what's going on in the political environment. So just kind of taking a break and taking a step back, and instead of reacting to the news, look for opportunities, maybe rebalance your portfolio. We think that that's one of the tools that we can utilize that has a large influence on results over time. You're rebalancing back towards your long-term targets. Certainly, maybe it might make sense to have some adjustments from our perspective with inside, asset classes based upon where policy might be headed from a longer-term perspective. But unless you have clear evidence that suggests you should do something different, rebalancing back to your long-term targets. The other thing is you always should have enough cash on hand for your short-term needs. And so that's another, we often get folks worried about trying to invest their cash that they need for short-term purposes and trying to, stretch for yield or investment return in something that actually requires taking on risk and really is intended for a longer-term investment. So we would avoid those types of things. Just make sure you've got cash on hand. And again, just if you need to, maybe check in with your advisor, make sure that your risk level is still appropriate and that it still matches your plan. So really going back and focusing on what your plan says, that's really the best route.
Yeah, no, I think that's true, Mike. I mean, really coming back to the comprehensive financial plan that's been built and designed for you with your advisor can really be a calming effect during these kind of uncertain times. So I appreciate your time today, Mike. Again, Chad Chase with CGN Advisors. If you'd like help with your strategy, please reach out to us. Our phone number is 785-340-3434, or you can find us on the web at www.cgnadvisors.com. Thanks for watching.